Welcome, blockchain buyers. Welcome to the channel. We've known since 2013, taper tantrum, that markets are addicted to Fed money. But now we face a bigger cold turkey risk that a stock and bond market shock triggers economy-wide bankruptcies. Will growth ever be fast enough that debtors can afford sharply higher interest rates? Doubts about that are why many invest in Bitcoin. The skeptics argue that government will have no choice but to absorb that debt. And because tax revenues won't be high enough for it to meet repayments, the Fed will be compelled to monetize it. In what will be a real-world test of modern monetary theory, many see this as a route to dollar devaluation and much higher inflation. One read on this: the U.S. government kept the economy from collapsing with stimulus checks, sector bailouts, employee retention loans, rent mitigation, and so forth. In doing so, it shifted private debt to the public books. A second takeaway: lower foreign investor debt holdings set up an easier path to monetization. If the government is less dependent on foreigners to fund itself, there's less concern about a sharp drop in the dollar exchange rate because most creditors are dollar-based anyway. A third, federal debt at 130% of GDP is far above the International Monetary Fund's recommended 80% threshold. That IMF, that's the International Monetary Fund. If that number were lower, it would be easier for the U.S. to grow its way out of this problem. But at these levels, we could be forever behind the 8-ball. Bad news for the economy, good news for Bitcoin. The conversation, Schiff show. Peter Schiff, a gold bug, who's also one of the most prominent Bitcoin critics, has a family problem. His son, Spencer, is all in on Bitcoin. Spencer's Laser Eyes Twitter profile says he's a former gold bug, but now a Bitcoin maximalist. With the younger Schiff constantly taking his father's anti-Bitcoin tweets to task, Schiff Sr. used the recent crypto sell-off to deliver a stern life lesson in public. Here's what he said. Against my advice, my 18-year-old son, at Spencer Schiff, borrowed money to buy more Bitcoin. He is now 113% long. He likely can't even qualify for a credit card, but he can borrow money at 8% to buy Bitcoin. I'm sure this is typical among HODLers. The next crash will be brutal. Wow. Did the man talk work? Hardly. Here's Spencer Schiff's reply. Good thing I didn't listen to your advice last summer. Oh, so he's responding to that tweet. He said, against my advice, my son just bought even more Bitcoin. Whose advice do you want to follow? A 57-year-old experienced investor / business owner who's been an investment professional for over 30 years, or an 18-year-old college freshman who's never had a job? Just wait a while. That advice will prove to be correct in the end. All right, Peter Schiff talking to his son. Who will be the victor? We will see. Of course, Spencer knew Bitcoin Twitter would have his back. Here's the aforementioned Michael Saylor responding to the elder Schiff with an own retweet, putting Bitcoin volatility into a longer-term perspective. So Michael Saylor said, do you expect the price of Bitcoin to appreciate more than 6.215% annually over the next 7 years? And then Schiff Sr.'s response, long-term gains don't matter if short-term volatility destroys your leveraged position. Peter Schiff responds to Michael Saylor and says, I don't, but even if it does, Bitcoin can easily crash below $10,000 first, especially if there's a lot of margin related forced selling on the next leg down. If that happens, leveraged longs might be forced to sell their Bitcoin before those long term gains can be realized. What many noted, though, is that Spencer's investing strategy was quite conservative, at least compared to what is on offer in crypto land. Time will tell who wins this family spat. In the meantime, Lolly CEO Alex Adelman has some other advice for the pair. And here's what he says: I hate to see a father and son fighting. If you need family counseling, I encourage you to use lolly.com to earn free Bitcoin back on therapy with at Talkspace. So that's all I wanted to bring to you today. Please like, please subscribe, and I'll see you on the next one. See ya.